Righto, let's get started on the assignment. So you open up your spreadsheet, go to the Your Details section and put in a bit of information about you, just your name, first name, last name, student number, email address. Don't put the @UNE at the end, postcode, go through that information. Then you've got your instructions. So you should read through these, and you may even find it helpful to print them off. People in the past said they found it particularly helpful to print off the instructions page, the helpful information page, the chart of accounts page, and the opening trial balance page, and the transactions page. Right, so we go back to the instructions. It says you've been provided with the following information: closing trial balance from the 31st of the 5th 2012. Now that becomes the opening trial balance for this month. The balance of your subsidiary ledgers at the same period, the chart of accounts, list of transaction for each month, a note containing helpful information, and you're asked to carry out the following tasks. So the first step is to enter your opening balances into your ledger accounts, both the general ledger and the subsidiary ledger. Now if you've printed out your chart of accounts, this is what I think you should do first. Go along and find your general ledger and your general ledger that we've started off for you, and I'd complete the setup of your general ledger. So you've got cash at bank, account 102. Then you'll have notes receivable, account 102. Actually, cash at bank was 101, notes receivable 102. Then you'll have accounts receivable, $103, and you will have provision. Actually, that should say allowance, but provision for bad debts. We'll talk about this later. What's the provision? It was the old name, so I guess just typing that in, I've put in provision, but provisions are now referred to as an allowance. So account 104. Now you keep going all the way through on this, and you'll get down to the bottom, the last account. So you keep entering all of those, and just to check that you're on track, you'll get to the very end, interest expense 740, and you can see your second last account will be rent expense 729. So that's getting your general ledger entered with all your chart of account details. Let's go back and talk a bit about the chart of accounts. So here's your chart of accounts, and it is set out in a certain way. Firstly, you have all your asset accounts, then you have all your liability accounts, then you have your owner's equity, the capital account. All of those accounts are permanent accounts, and when we refer to the accounting equation, assets equals liabilities plus owner's equity, that's those accounts there. Now there's also a number of temporary accounts which eventually, when we get to the end of the year and we close, will find their way into the capital account. So what are they? Well, firstly they're made up of other equity accounts, which would be drawings, which we've got in here, and that's the money, the owner drawing money out. It would be also capital introduced. Now, depending on the business structure, and we've got a sole trader here, and you don't need to master the different business structures yet, but if it was a company, there would have stuff about dividends. Then we have the income summary account, which is a pretty lazy account. It's only active on one day a year, and it only has 3 journal entries go through it, and that's emptying all the temporary accounts. That's revenue and expenses, into the income summary, and then emptying the income summary into capital. Now, we'll talk about that later in the trimester. Then we finish off with the other temporary accounts, which is revenue and expenses. So there are the accounts that you have now posted through to the general ledger. When you see general structure with assets, and we have current assets first, then non-current. We have current liabilities, then non-current. In this chart of accounts, we've got no non-current liabilities. Now, we're attempting to mirror as much as possible a practical scenario, but we also need to keep things as simple as possible because we're compacting a number of issues into a small space. So you will find there's some things that are not totally realistic. There's also some notes over here which are not really part of the assignment, but they're helpful information, especially as you go on doing the assignment later on, and also good for learning. So here we have allowance for bad debts is a contra to accounts receivable. And here we have office supplies. Well, you can come to those notes a bit later. The next step you should do is you print it off the trial balance. This is your opening balance, and you go back to the general ledger. And what we're going to do is enter all the actual balances in there. Now, in some ways, it would almost happen in reverse, that you, in fact, summarise all the balances you have in your general ledger into your trial balance. But in this case, we've got all the balances in the trial balance, so now we're going to put them into the general ledger. So what do we have? So we go cash at bank, we go date June 1, so the balance is at the end of last month, the beginning of this month. Explanation, this is just opening balance. Could just put in OB. Sometimes people put carried forward. And the balance for this will be 30,000. Then we go down to notes receivable. And again, June 1, all these opening balances will be, so OB, I'll go opening balance. And the balance is 20,000. And we go to accounts receivable. Accounts receivable, it's June 1, opening balance, and it is $139,000. So accounts receivable is all the money that people owe you for sales that you've made on credit. And we have a contra account to that, which is allowance for bad debts or provision for bad debts. And it is, so you're owed $139,000, but you're not sure you're going to be paid all of that. So you're making an allowance for bad debts. And we'll talk about how that's done much later in the unit. But June 1, opening balance, and it's $8,000. Now what's this credit over here? Well, the normal balance of an asset is a debit. So all of these accounts are assumed to be debits. If they're not debits, we need to indicate that they're not debits, and that's what we've done here. So the opening balance of allowance for bad debts is a credit. So when you read a bit more about normal balances, there's a video on normal balances. Might be helpful seeing that video on normal balances. Now you continue to go through this process, and the very last one you'll get to will be, I'm not sure where, there's accounts payable, so it's going to be after that. So you'll have accounts payable, the next one would be notes payable, then you would have interest payable, be here, then you would have owner's equity capital. I've got that in, so it'll be the last one in, June 1, opening balance, and that's $308,000. Now it's a credit, you don't need to put a credit in because it's an equity account and it's assumed that it's a credit. Now you also need to fill in all the ones in between, and then you would have completed step 1 of this assignment, and you'll also have an understanding of the relationship between the general ledger and the chart of accounts and the general ledger and the trial balance. So later in this assignment you'll be asked to produce a trial balance from the general ledger. So here we took the trial balance and we put it into the general ledger. Later you'll be asked to take the trial balance and you'll be asked to take the general ledger and prepare a trial balance. So that should be enough to get you started.